So good evening, everyone. My name is Maurya Hanspal, and in this session, we're going to talk about stock market in general. Okay. So in the previous sessions, we talked about the various terminologies which are important to be understood in stock markets. Okay. We talked about the differences between trading and investment, long-term investment, short-term investment, your long-term capital gains, short-term capital gains, the difference between your swing trading and scalping. And we also talked about the different types of market orders for which people are confused about when they open their dashboard for trading. We talked about the CNC, the cash and carry, like which is used for long-term investment. We also talked about the margin intraday square off or the MIS, which is used for trading purposes. Then we talked about the cover order, the bracket order, the aftermarket order, stop loss limit, stop loss market, stop loss, like we talked about it, the trailing the stop loss, the good till triggered or the GTT order. So all these things we discussed in detail with practical examples. So now in this session, I will talk about the market in general, that what exactly is happening in the market nowadays. And a lot of people are panicked as to when to buy the shares or sell the shares in this market. Okay. So first of all, we have been seeing the drawing down of the market or a huge drawdown on the market has occurred over the past 1 week or 2 weeks. Okay. People call it the one major reason for the corrections of the market. See, this reason falling of the market from around 60,500 to like 61,000 points to 58,000 or 57,500 is not a crash. Okay. मार्केट का अगर लास्ट मंथ में अगर पीक गया था 60,500 से लेकर 57,650 या जहाँ तक अगर मान लो कि 57 भी पहुंच गया, इट्स नॉट अ क्रैश. So do not use the word crash for the market. Okay, because what like usually happens in the market, people randomly call it crash. And all of the people who are not aware about the like about the market or how to analyze the market, they do not know that when to buy or when to sell. And they go on that herd mentality, which is again a behavioral bias. Okay, they work on herd mentality and they won't do their own research or calculations because they want to save their profits, right? Because ultimately, what it is, the loss, the impact that you get after the loss is much more than the impact that you get और जो तुम्हें खुशी मिलती है like when you earn the profit. Okay, so loss का दुख का impact ज़्यादा है as compared to profit की खुशी का. Okay, so that is why people like they do not like believe on the market dynamics or market structures or conceptual knowledge. They just tend to hear other people like who basically say that the market is crashing, the market has fallen, the market has breached that level or that level. So completely understood fundamental and technical analysis, they come into place and they help us to analyze the market. Fundamental analysis is useful for long-term investing and technical analysis for trading. But this is not a market crash. You need to understand the difference between a market crash and a market correction. Okay, if the market would have fallen from 60,500 to 50,000 to 45,000 to 40,000, then you would call it as a market crash. But falling by 1,000 units, 2,000 units, 3,000 units, 4,000 units is not a crash. It's a healthy correction. Okay, and there are certain reasons which are attributable to this healthy correction. Okay, the first reason like which is attributable to this healthy correction is, so before telling me the first reason, these things happen in market all the time. Okay, like what happens basically in the market, one you call it as a displacement phase. So what happens in a displacement phase after a previous market crash or a previous market correction? Okay, I told you the difference between the market crash and market correction. Okay, so just imagine the market has crashed or either corrected from a very high point. Okay, so that is, and the market is at a low point. So that is the point of displacement. Okay, because the market is available at a very low price, the shares have been displaced, the price has been displaced. At that time, the people would start buying. Then people would start buying hoga. Okay, at that time the people would reach at a position when they start to buy a lot. Okay, and see, this period we are calling as a displacement. This phase we call it as a boom. Okay, because at this time the people are buying the stocks. and they know that the stock prices or the stocks are available at a very low price and they can buy it. Okay, and this hence they start to buy. A market में demand होगी the stock price would also start to rise, and like this is called a boom, like where you have like fundamentally good valuations and everything is on track and nothing is overvalued. But when people start to buy more and they get greedy, and as Warren Buffett says, like when people get greedy, be fearful. And when everyone is fearful, be greedy. Okay. At this point, people get greedy. And this phase is called your euphoria. And it is marked by excessive valuations, irrational exuberations. Now, what exactly is irrational exuberation? Irrational exuberation is something that you are buying the stocks because everyone is buying the stock and the stocks have no fundamentals and just excessive valuations with no fundamental core base. Okay, so that phase is called euphoria. And a phase comes at this point when people start to sell and the market starts to correct. And this phase is called the profit taking. And currently जिस phase में हम हैं, that's a profit taking. Okay, and if people like don't realize the markets in general and they do not take into consideration the other factors as well, the fifth thing that happens is the panic selling. And panic selling is a crash. Okay, so crashes happen in the least scenarios, as happened in the case of 2000 dot-com bubble, we had in 2008 crisis, like we had in like 2020 COVID crisis. Like in the initial days the market crashed, so this was the panic selling. Okay, so but now like everyone is accustomed with the market and they know that COVID is like not to go and people have to like live with it. Okay, so max to max, like this phase can be like reached in the market as for now. Okay, and why I say that like there can't be any panic selling, because like what happened in the previous times in the 2000 dot-com bubble or your 2008 crisis, at that time the companies that were rising, those companies were not fundamentally strong and they had no base within them. Those companies were just rising and rising. And especially like when we talk about the 2000 time, at 2000 time, like you had companies like pets.com or the webvan.com, a company which was quite similar as the growers in India. Okay, at that time people believed in the slogan that go big or get lost. Okay, the companies had no fundamentals and the valuations of the companies were rising. In 2008 crisis, like we had the housing bubble, because like loans were being given to like subprime borrowers, and that is why the non-performing assets of the companies were rising, and when the Fed increased the rate of interest, everything crashed. Okay, this time the valuations are high, agreed. Okay, and because of high valuations, the market would undergo correction. So that is the first reason. Because of high valuations, the market would undergo correction, but not panic selling or crash. Because this time the fundamentals of the companies are strong and the earnings of the company are coming good. Be it your Reliance, be it your Tata, be it your IT companies or any other companies. Like there might be some margin pressure, but the revenues are high. And why the margin pressure? Because of the increase in the cost of raw material. And that is one of the reasons like why these companies are having a huge margin pressure. But since their revenues and sales are good, it's fine for the company. And in the coming quarters, the company would like cope up their margin pressure and be like more profitable. Okay. And margin pressure doesn't mean that the companies are into losses. Okay. The profitability is more, but is less, but the companies are fundamentally strong. Okay. So that is one reason. So, and the second reason is when there are excessive valuations, people start to analyze the market, and especially the FIIs, the foreign institutional investors, like they start selling in the market. Indian market may all the shares which these people have purchased, they start selling in the market. Okay, because of the excessive valuations. A company that can be valued at 200 rupees, that company is being valued at 400 rupees or 500 rupees. So these people are like very well knowledgeable and they know that which company is undervalued, and if the Indian market is getting overvalued, they'll sell the stocks and they'll go to some other markets. Because at that time, when the stock market boom started, India was an undervalued market and emerging economy. And people started to buy the shares and the demand rose, and we know that when demand rises, the price of the shares also rises. But if they rise on an excessive way, people are afraid that the investments might shift to China. Because nowadays, India is enjoying the China plus one strategy as well. because China is into a technical crackdown and all the things are like stopped there. Plus the interest rates are also going down. So they might shift the investments from India to China because at this time China is a very undervalued country, where the West is like increasing the the rate of interest, be it your Fed and anyone else. But China country is losing its monetary policy and it's undervalued at that time. Okay. So that is like second of the reasons for the FII, which I believe. The third reason, which I talked about, the most important reason is the federal interest rate. Okay. The interest rate is increasing in the market. So what happens when the interest rate starts to increase in the market? So when the interest rate starts to increase in the market, it is quite, I'll not say bad for the equity market, but the equity markets can face a correction. But if the fundamentals of the market are strong, the correction would be for a very short term. As we saw in this case, the fundamentals of the company are strong, so the correction in the market would be quite less. Okay, so basically, like what happens when the yield on the bonds or the rate of interest on the bonds starts to increase, people start to shift their investments from equity to these bonds, because now these bonds are providing a higher rate of interest, right? Because equity market में इतना rate of interest नहीं मिल रहा था. Okay, and there is like huge inflation and money supply बहुत है. So at a certain point of time, the Fed or the central bank of any country, like, uh, like whatsoever, will have to increase the rate of interest. And when the rate of interest on these bonds, the 30-year bonds, 2-year bonds, 1-year bonds, 6-month treasury bills, when these starts increasing, people start to withdraw their investments from the market and they start to put in bonds. As we saw in 2019, like during the taper tantrum, like we call it as popularly. So what happened at the time of taper tantrum? The Fed had increased the rate of interest on bonds. So the Indian market or the US market had witnessed huge capital outflows from the market, and that amount had been shifted into bonds. Okay. So once this amount is like shifted into bonds, the price of those bonds falls, right? Because ultimately there is an inverse relationship between the price of the bonds and the yield. So till a certain point of time, okay, the yields are more. But जब बहुत demand बढ़ जाएगी, the people would be buying that bonds in the US dollar की currency. Okay, and again, the value of the US dollar would also appreciate because the yields and the US dollar, they move in the same direction. So when people have withdrawn their investments from the equity market and started to invest in bonds, why? Because the bonds are giving you a high rate of interest or high yield. Ultimately, the US dollar would also rise. But in the long term, the people would get back into the equity market. Why? Because like when the price of something rises, like due to demand, the yields fall. जब bond का price बढ़ेगा, then the yields like would start to fall. Okay. So like that is like one of the reasons that, and again the people would like start shifting into the equity market. So that is the cycle which goes on. Okay. And nowadays the thing is that, see, when the US market appreciates, the Indian market has to depreciate. Not always, but in 90% of the scenarios. There is an inverse relationship between the two. And the clear relationship can be witnessed in the recent times also. Like when the market was rising in India and in the US, like we had like witnessed a huge market correction. Okay, so that is one thing. So bonds short term के लिए होगा, but धीरे धीरे the investments would again be channelized into equities. Okay, because people have a belief in equities like more than bonds, and especially the risk taking people. Okay, and there are more risk taking investors in the world rather than the risk averse investors. Okay, so people would be buying the equity market once again. Bonds में डालेंगे पैसा, but they would come back to equity market and start buying the shares. Okay, so one more thing, like what happens, you might have heard in budget, like on 1st February को budget आ रहा है. So people are saying they need to include bonds inclusion, like in the global bond index. Bonds को list करना है, जो Indian bonds हैं, like they want to list it again. If the Indian bonds get listed, of course these bonds like would get benefit of the rise of interest rates, right? अब Indian bonds यहाँ पे list होंगे, ठीक है? At this time, the monetary policy in India or be it any country, ठीक है, is not accommodative. अभी है, but आगे जाके the RBI has to suck the liquidity from the market. Either the RBI has to increase the reverse repo rate. And why reverse repo rate? Because reverse repo rate is the rate at which the RBI like gives money to the bank, and bank like market में डालता है, ठीक है? So particularly the market has to increase the reverse repo rate, or reduce like the government securities purchase program, as we call it as DSAP, the government securities acquisition program. So the RBI has to suck the liquidity from the market. Okay. So that would be the main aim of the government or the RBI in the future. But now if the bond get listed in the market, the Indian bonds, so people would be like purchasing the bonds. When people would be purchasing the bonds in INR, that is the Indian rupees, because the Indian bonds have been listed in the global bond index. When people would be purchasing the bond, the same thing would happen. What? The rupee would appreciate because people are buying the bonds in rupees. Again, the value of the bonds would also appreciate because like huge demand of the bonds, but yields will fall. जब yields नीचे गिरनी start हो जाएंगी, inflation बढ़ सकता है, ठीक है, because the rate of interest would be low. And all the banks, all the commercial banks, like they set the rate of interest on the basis of the government bills. अगर ट्रेजरी बिल्स का रेट बढ़ रहा है, ठीक है, तो बैंक्स को भी अपना रेट बढ़ाना पड़ेगा. अगर मान लो कि ट्रेजरी का गिर रहा है, ठीक है, तो बैंक्स को भी गिराना पड़ेगा. ओके. So at that time, the value of the INR like would also be so high, but the yields of the bonds like would be too low. अब the RBI की आएगी problem. The RBI has to stop inflation. So either RBI would be like purchasing the forex reserves or selling the government bonds. वो bonds को बेचना मतलब start कर देंगे ताकि बाहर के लोग bonds खरीदें. So like more bonds would be like sold in the market, और फिर forex reserves खरीदना start कर देंगे because forex reserves they tend to stabilize the value of the currency. Okay, so like these two like scenarios like people are confused about कि क्या होगा. Plus also India has a large fiscal deficit like 90% of the GDP. So the bonds can be risky also. अब risky bonds होंगे तो फिर India को ज़्यादा rate of interest देना पड़ेगा. So that one thing can also come into place. Okay. That was about the market discussion in general. ठीक है.